What's going on, YouTube? Now I'm back with another video, and this video for today would be another trade recap on a trade setup that I had took Friday morning for New York session. And so, as you can already see, right, I already have lots of drawings and things like that I had did for my Discord members, and I had sent out my analysis and the explanation for them so that they can sort of like follow along as best as possible. But specifically for this video, I'm going to pretty much delete everything and start over from top down so that you guys can pretty much see the full process that I go through when analyzing the markets and preparing to enter a trade. So real quick, boom, right? Now, first things first for this day, starting from the daily time frame, okay? In order to get the initial direction of the day, the very first thing I did, right, was I looked at the daily time frame, and at this point around New York session on Friday, as you can see at the bottom, Friday, right? Let me zoom in a bit. 1 second. So the only thing that I paid attention to when it came to the daily time frame was two things, okay? I paid attention to, well, overall, let me zoom back out. I paid attention to the main direction of momentum of the market. Now, as we can see, just very quick, we have two things, right? One, we are underneath my MA. So that's one sign that, there's more bearish pressure overall in the market at this giving time because we are underneath our MA. Now, second though, was just very quick understanding what phase of the market we in. Do we see more bears or bulls in the market? And at this current time frame, there were way more, and I'm thinking overall here. I'm not trying to think about the short term, like we see this counter trend, right? But what I'm looking at is overall, are there more buys or bears going on in the market? And as you can see, we had this huge, I'm gonna just draw it like this for you so you can see we have all this bearish momentum that is overall pointing in which direction? It's pointing downward, okay? Let me try to make this an arrow just for the better visuals, right? So here we go, boom, arrow, there we go. We're pointing downward. We have all of this bearish momentum entering the market. And so just off of that in mind, that was pretty much all that I was trying to look for on the daily time frame, was where is the overall momentum of the market, right? And so once I identified that, I also see a whole new thing right now. Now that I'm looking at the market again, I see distribution, manipulation, decline. Okay. But I'm not going to draw that out because this is the daily time frame. So I only wanted to look for two things, which was the overall direction and the draw of liquidity. Where are we headed next? And so let me zoom back in so I can get into the detail of the candle, right? Just this specific candle, what I seen was, okay, we had this previous daily candle swept, okay? This previous daily candle high. So draw this high, all right, boom. Let me get my daily CRT, the high, and then I immediately always mark out the low so that we can get the full range of, the overall momentum essentially for the day. Not all CRTs play out in one day, but for this specific trade setup, it played out in one day. So now here we have our daily range. So what I did in real time, I did go down to the 4-hour, right? And I'm gonna break it down here. Well, I'm not gonna break it down, but I'm gonna explain here on the 4-hour time frame. This is not enough detail to really take advantage of anything at all. So we go down, just keep going down the list. 3-hour. Now that I'm looking back at it, there was a small opportunity with a daily CRT here that did sweep this high. But overall, what I was looking for, what I used was the 30-minute time frame, because to me, it was the cleanest for market structure within the range. Okay. It shows enough detail. It has enough volume to really see the pullbacks of where you could re-enter the market. And so with that in mind, right, this was, let me draw this as a daily CRT low so we don't get lost. Boom. Make sure that was right. Yeah. Okay. So now with this here, you can see just from the 30-minute time frame, right? Very quickly, you could see that sweep, and then you could see the sweep of the high. And now you can see within this range, price is ultimately targeting our daily CRT low, which was this low here. But for the moment, right, now I'm getting ready to draw the actual trade setup. Okay. So for the actual trade setup, as I'm preparing to enter the market for New York session, what we have, well, the first thing I did was I looked at the market, and you can very much see that what phase we are in. I know that I had someone comment on one of my previous videos saying that they pretty much struggle entering from the distribution phase or in the expansion phase. And so when it comes to identifying the phases, it's very easy. The only thing you have to do is be honest with yourself, right? What do you see right now? Like, okay, what I'm going to do, I'm going to make this as realistic as possible to how I'm drawing it. So I'm going to take some of these away, okay? So the very first thing that you do is that you pretty much be honest with yourself. What do you see in the market? Do you either see an expansion or do you see distribution? I mean, you can't really get it too confused for buyers or sales. And what you'll see here is that once you look at the market, the most recent thing that you see is you see distribution, which is sales. You see these sales entering the market. So from that, what I did was, first thing first, I drew my zones, right? So we have this high here, this high, which is pretty much, to keep it as simple as possible, right? What identify this as is simply liquidity, okay? Liquidity for the market to collect and then get ready heading in the other direction. So majority of the cases, the market will never pretty much turn around very early. It wants to get to a point where it reached a area of interest, it reached a high point in the market, or something that pretty much, like people would say, a place where stop losses will be in the market, right? But very quick off of that, let me complete the range. So they just say 2 lines, and for the sake of it, my first line, key level, make it more a little precise, key level. And our line number 2 is pretty much just for the range. It just gives us an area where price can go. Now, normally I'll probably put it higher, but since that you can see it was pretty much a struggle, that anywhere within this area, let me just make it gray just to further. Oh my goodness, I can't find nothing right now. Okay, boom. So pretty much anything within this area is where I'm trying to look to get into my sales, or actually within like this full range like this, I'm looking to get into my sales. But for the sake of accuracy, it's more important for me to just draw straight lines, because you can always be more accurate with your analysis. But now with these 2 levels, right, from this point, I'm gonna just draw them out, right? We have our phase 1, which is the distribution, right? Now from that, we understand that after distribution comes manipulation. So now we have our phase 2. This is the phase that we are in right now, because our phase 1 already started. Our distribution has already entered the market. Consider distribution as the last rally in either a bearish or bullish direction, right? Where is the momentum? Bearish. Okay, so now we understood that after that, everything next will be manipulation. Now during this phase, you can enter for buys if you wanted to, but I like to stay aligned with the overall direction. So, and just for the sake of analyzing, right, I will put current whenever I'm in real time, like whenever I'm actually analyzing the market, I do like to know whether I'm not it's current or not. So I will put that there. And then, it helps me be more patient and actually wait for that to get hit. So now I'm about to play the trade and just show you how it plays out and see what happens, right? Boom. I went a little too far, okay? But very quick, as you can see, once price hit the key level, it began to do what? It began to reject that level, but that's not a sign of anything yet. So next, the next candle is the important candle here, right? Let me see here. Soon as we get this doji now, so now if price is showing that, okay, we have pretty much strong rejection at this level. And for me, let me zoom in now, right? For me, what I begin to see is another CRT setup forming on the 30-minute time frame. So let me just draw out the highs and the lows on this time frame for this area. Boom. CRT high, 30-minute. CRT low, 30-minute. Now, the way that I do it is I constantly draw the CRTs just so I can always pretty much know the current draw of liquidity for the current time. But that being said, okay, now that we will have something like this set up, around this time, I actually probably would not have waited for the full candle close. I would have took my entry somewhere within these two ranges. So like we probably within this wick, let me go look and see what the 1 minute time frame was like so that we can see exactly how price was rejecting, right? And this is where I actually took my entry in real time. So I seen this, right? I seen that, okay, on the 1 minute time frame, here's the key. You see all of this bullish momentum in the market, right? Bullish momentum. But at this higher time frame key level, we're looking for the bearish momentum to come in. So around this level, right? This was like the first sign, these two candles, like, okay, we got some bears coming in because we already took over the high. We already swept this key point of structure. Let me make this yellow. We are already swept above this key point, right? So I'm gonna leave this here because it might actually help some of you guys who are trying to see things from a CRT perspective. So boom, okay. This here was a first sign that sellers are entering the market. So what you could have done, what you could have pretty much took a trade after here. This is a valid entry to take for the trade with our stop loss above. I think mine in real time was 13 pips because I understood that on this day it is a news day. So I wanted to leave a bit more room just in case, price spiked up or spiked against me in any kind of way. But overall, I didn't panic about news because I understood, our draw of liquidity, and I understood that news flows with the higher time frame momentum of the market. News will never break structure, ever. The moment you see news breaking structure, the market is cooked. So literally. So okay, now I wasn't actually targeting my daily time frame lows. I'm going to just switch back to the 30-minute real quick. So I wasn't actually targeting my full low. For me, I was okay with a 1 to 3 on this trade. So I simply look for price to come within here, this range like this. And the way that I pretty much looked at this was a liquidity pool for the opposite direction. That's how I just looked at it for the moment, because I understood that we have this manipulation. And Let me just draw it out a little bit longer, and let me draw phase 3 for you guys, right? Phase 3, which is the final phase, which is our decline in this case. So let's see. Yeah. So my trade setup was pretty much just like this. And let me find another lower time frame so that you guys can just follow along with the overall momentum as well on a lower time frame, just so you can see the movements of the candles as they flow, right? So now let's watch what happens. See, at this point, price went straight. Let me zoom in some for you. Price pretty much went straight down, and it continued the bearish momentum. Now, mind you, well, this trade I actually entered pre-New York. It was 8 o'clock. It was around 8 or late 7. Now, as you let the trade play, right? You don't panic. You still understand the market. I believe news at this time was 8:30. So once news came in at 8:30, it didn't come in yet. Let me just show you. This happened. Now, price came up very close to our stop loss, but as you can see, I left just enough room for price to reverse because of this, right? Once you zoom out, you see that price just came into this area like I was saying, right? Remember, I drew this little range. Price was pretty much rejecting from this area every time that it got there. And so I just decided to mark my high here. So just for analysis purposes, it probably would have been better to mark my key level up here for a news day, because on news it's more volatile. So the key level overall is likely to be the one that's further away from, our first level that we're trying to look for, just so we get a clearer zone of entry, right? But so the time frame that I enter on, it always depends on the volume. Always depends on the volume. The more volume, the lower the time frame. The less volume, the higher the time frame. So normally on average, I say my entries are anywhere between on the 1 minute or the 3 minute. Normally, depending on the volume. But since, once again, it was news, volume was very high on this particular day. So if you would want it to catch the entry, you pretty much have to enter on the lower time frames. And so the reason that this entry did hold was because I purposely positioned myself before the news volume. So I purposely entered before New York session because I thought to myself, like, okay, I know that there's news coming. I see, though, that we already touched my key level. So if I miss this opportunity to enter the market now, I most likely will not be able to find it again, because once news comes, the market will be very volatile and it will likely take off in my overall direction. And now I was very confident in this because of the daily time frame draw of liquidity, right? So I knew that, okay, from the overall time frame, we got the bearish momentum. And like I was saying, we have the daily time frame targeting our low. So structure wise, everything is looking more bearish than bullish in terms of overall momentum, not current momentum. Like for the previous day or whatever, like we had this bull momentum, but I was like, no, from that, we have this bearish momentum. And so I took my trade. And also, as we started to have our rejection, I did notice, let me see, am I too soon? I did notice that on the 2-hour time frame, because of our rejection here, right? Price comes up, it rejects and manipulates into our low. And well, it manipulated into our key level, right? And so what I did was, from the 2-hour time frame, once this candle began to close or come underneath, I spotted that and I said, okay, so now from this point, we have another 2-hour CRT. Let me see, candle. So let me draw this just for extra confirmation and confluence to where price is going. So now that we swept this time frame 2-hour high, I'm like, okay, price now has a very high chance of targeting this low and ultimately entering our liquidity pool so we can just exit the trade, right? Let me go back to the 30-minute time frame, because that's the time frame that the overall setup is based on, right? So from there, at this point, you pretty much just let the trade play out, right? Boom. And this was very, very simple. Our trade ended up hitting at peak. Our trade did come down to the full low, and I exited here. So the reason that I did exit was because it was a Friday and I was just okay with exiting my trade. I didn't really care to hold it or anything like that, because as soon as I exited the trade, this whole swing happened here. Well, not swing, but this whole bearish candle happened here. So I quite literally exited the trade somewhere around here, actually. Well, it was like here. And if I would have stayed in about, let me see. If I would have stayed in about 5 more minutes, I exit once I seen this rejection. 1, 2, 3, 4, 5. If I would have stayed in 5 more minutes, I would have been in for all of this. It's a little bit of pain, I'm not gonna lie, but it's okay because I still had a winning trade. You can always be happy leaving the market with a winning trade. All right. And so very quick, I mean, that was pretty much the trade. We had our 3 phases: distribution, manipulation, decline. We had price come first, tap into our key level at the manipulation phase, right? And then once anything underneath that, we understood that we'll be entering the decline for the market, and the market began to do just that. It literally began to plummet. Okay. And so that was the trade. I'm not going to overcomplicate it any more than it needs to be. Very quick. Once again, distribution, manipulation, decline. I understood what phase of the market we were in. I understood that on the daily time frame, we had the sweep of the highs, the sweep of the daily high, and we were then targeting our previous candle low. On the 30-minute time frame, I felt that the 30-minute time frame was the cleanest, and so I pretty much began to wait and draw my overall time frame setup on the 30-minute, which was the time frame that I wait for the key level on. And at the key level, we began to get our 30-minute CRT. And so I looked down and went to a lower time frame and began to look for my entries from that point on. And I took the entry, and as you can see, our trade survived news and went into profit for a 1 to 3. Exited the trade. And real quick, let me just see what would have been the full risk to reward on this trade. Full risk to reward 1 to 7. You can say 1 to 7. I mean, let's be real. So a 1 to 7 risk to reward, and that would have been it for today. So quite literally, the swing high to the swing low. A lot of people say that you can't catch the swing high and the swing lows, but with CRT, it becomes very easy. Now that's going to pretty much be the video, quick trade recap. Hope y'all began to understand the video, and if you are confused, do not be afraid to watch it again and watch it over and over until it begins to click. So see y'all in the next video. Peace.